think I'm starting to struggle with the fact that there's not much money in the account anymore. And then this last trade played with me a lot. Context. The frustration I feel right now is pretty intense. If I said I wasn't frustrated tonight, I would be lying, because I took two very, very good trades. Please allow this trade to work so I have clarity on how I need to be trading.
As usual, this trading fortnight was full of lessons, but one major lesson that stood out was reading market context. As a novice trader, it's so easy to have our setup, but become so narrow-minded and not take market context into consideration. I did this and it caused me to overmanage trades, have confusion around my take profit process. In this video, you get to see my thought process through the fortnight, and I'm going through two trades that demonstrate when and where and how you should be taking market context into consideration, and how it can help you not overmanage trades and perform better when it comes to trading. This fortnight, I did make a deposit into the account of $1,284, and I lost $201 throughout the fortnight, leaving the account at $1,587.
It was going completely against what price was really saying direction-wise as well. And I had this weird feeling tonight too that there just wasn't going to be a trade because of how bullish it was. There was not any substantial pullbacks. And I notice sometimes when things are so bullish, instead of sellers getting caught, the volume normally peaks when it resumes.
Now, before we actually have a look at this trade, I want to explain what I meant by caught sellers, and how when the market is so bullish and very obviously bullish, my setup doesn't appear as it normally would, with a spike of volume on the down move to then continue up. The way my strategy works is essentially we're entering when there's caught sellers in the market. So what normally will happen is volume will peak because there's a lot of sellers coming in and there's a lot of buyers coming in at the same time. And that's why the market has higher volume or peaked volume at that particular time when it's going to continue. Now, this will only happen if there will be trapped sellers in the market. If you've got a very obviously bullish market, what happens is the volume only then peaks when it continues upwards, because most people aren't going to be trapped sellers because it's very obvious that the market is very bullish at that particular time. And this is one of the areas where I'm talking about context and where that comes into play with your own strategy. Now, this is my strategy, so it may not be the same for you, but it's something to always take into consideration. All right, so let's actually have a look at the trade and see what I meant by this.
If I said I wasn't frustrated tonight, I would be lying, because I took two very, very good trades, but I either didn't manage them right or they tapped me out break even. And I'm starting to feel as though maybe I shouldn't be trailing at all in my strategy, and I should just have a take profit for the high, and it's either going to hit my stop or hit my take profit, and that's it. Don't overmanage it, don't do anything. Because tonight proved to me that my entries and everything I'm doing in that sense is really good at the moment, and I'm being patient with what's going on the chart. I'm taking all the considerations in, but I just feel as though the trades aren't quite developing as they should. They should have been easily both 3-4 hour trades, and I missed out on the move because I moved my stop up. Profitable scalpers, might I add, please tell me, do you trail your stop or do you just let it do its thing? I really thought I was gonna finish this trading session angry and frustrated because I've been battling with my take profit process, and the first couple of trades I got tapped out, basically break even on both trades when I should have just taken profit at different points in time. And then this last trade played with me a lot. It seriously, more than any other trade that I've taken, it was really just bouncing off of my break even level. And this one time I said, we are not going to move the stop, and it moved a fair bit in my favor, and I moved my stop, and then I was like, no, that's not how I meant to do it. I pulled it back down, and I not only mentally battled with this for so long, but I also physically did. I literally moved my stop up because I was like, I'm not giving back this profit, at least do break even, and then I pulled it back down, and I went through that so much, and I pulled it back down last and said, nope, I'm not doing it, and I watched it. It came back down. It would have tapped me out, and the last candle was a full one candle straight to TP, and I was just in shock, because during this trade I was like, honestly in my head I was like, God, just like please allow this trade to like work so I have clarity on how I need to be trading in terms of take profits and not trailing and all of that stuff. There was so many lessons to learn tonight. FOMO, rushing in, context. And I think tonight it was the first night that I ran into something where I've heard an advice where it was if this, then this sort of statement. So like if the price goes to here, then this. If price does this in your setup, then this is your take profit. And I think I learned that tonight.
So you can see here, we lost $50.36. So we're within my risk parameters. We were aiming initially for $177. And then the initial risk was at 56. Okay. So we did follow rules in that sort of circumstance. Now I want to actually make this big screen for us so we can actually really pay attention to what's going on the chart. And we're going to start off with the 30-minute interval. Few things here. You can see that I did have a 50% markup here. One, I didn't take into consideration that we had already hit that level, that 50% level, prior to my session, right? I didn't take that into consideration. So this is again where context would have been very helpful, that we had already had a bullish run. Okay, we've come back down, we've hit a 50% level, and then we've continued, right? And then I tried shorting here. So it didn't quite make sense, right? Based on that. Now let's go ahead and pop down to the 5-minute where we took the trade, okay? You can see we did have a huge bullish push, as you can see here. And that should have indicated to me that I shouldn't have been shorting, right? And although you can see I've got this down leg where I've then marked another 50% level here at 25,437, okay, on this 5-minute down leg, I simply shouldn't have done that. And although you can see my strategy play out here where I've got the down leg, we've got falling volume and then a peak in volume on this candle, okay, you can see I've sold here, right? So I've got everything, and the tape did confirm, it did have a bit of absorption here, and the tape did confirm that as well, but I entered against kind of where I should be going. Now, as I said before, when it comes to price being so bullish like this, it's likely, and I should note in context, that my trading strategy won't work, and normally volume comes in when the trend is resuming because it's so bullish, we're not getting those trapped sellers that we normally would get, okay? And it's even seen on this move here, right? So again, let's just show you here. Okay, this is about a 50% move of this up leg. You can see we had two nice moves down, okay? But we didn't have a peak of volume on that down candle that we normally would see. And that's because when we're so bullish like this, we're not having those trapped sellers. So therefore the volume isn't peaking on the move down. It's actually peaking on the move back up because buyers are so obviously in the market. The market's 90% buyers. And this is something that I need to implement when I'm coming to the trading session, is having my trading strategy based on context always, because this will always guide me into making better trades and making more A+ setups rather than this one where it's something that I could have easily avoided if I took context into consideration. Now, if we pop down to my notes, I've said trade setup was valid, but I did not consider any sentiment or context at all here. Price was clearly very bullish. Exit, I didn't even follow stop rules, so I had stop wider up regardless of how much I risked. My stop placement wasn't correct. I was impatient for a quality setup, so just taking a setup because I had those line figures, I didn't take context and wait for something that not only had my setup but also matched based on market context or sentiment. I said, lesson learned, I may need to consider acting on 2-minute volume in cases of insanely one-sided action, so where we're insanely bullish, as I was explaining. In this case, it was bullish, so I think shorts weren't getting trapped, caused the peak of volume to be on the move down. Instead, when price sentiment is like this, it happens on the way up. Only caused further confusion when it came to over-managing trades or having some trades work out and then some trades not, and not really understanding why. right? And this was because I was basing my profit target on the same thing every time, rather than taking more into consideration when it came to how I should be taking profit based on context. And this is where I finally learned that lesson when it came to if this, then that sort of circumstances, where if price context is doing this, but my setup occurs, then my profit target must be this instead of that. And just understanding that when it comes to context, your trading strategy itself may be really good, but you have to adapt and change based on the context. And context is the most important thing when it comes to trading. Let's take a look at a trade where context needed to be considered when taking profit and where this thought process should have came into place. Now this trade was on the 12th of December, and as you can see here, we lost $55.86. Now you can see I put 4 stars because it was a good trade, which we'll get into in a moment. I was initially targeting the high, which again, we'll get into in a moment. It would have actually been more that 150 mark if I took context into consideration. Based on what I wanted to risk, we did okay there. Now let's actually pop open the chart and have a look at what's going on here. Now there's always a little bit going on my chart, so I'm going to try and be a little bit better at explaining, what's going on, what are we looking at? Because at the end of the day, if we're going to be building context, that's what we need to be doing. And I noticed that in my journals and my videos, I'm not doing that. And it's just proving my point that I'm not taking context into consideration. And even when it comes to reviewing the trades, I wasn't taking context enough into consideration.
Tonight was a better night, but I think I'm starting to struggle with the fact that there's not much money in the account anymore because I could only place one contract, and because of that, the profit amounts didn't look equal to what I'm used to seeing. Therefore, my psychology was being affected and making it very hard to take profits. Luckily, I did, and I recognized that in the present moment it was happening. But I think it might be time to put more money in the account purely for this. Like, I took a trade and I only made $50, but in reality, if I had been trading my normal risk, I would have made about 200. And even now, after the fact, it feels like it's affecting my mentality because that would have put me up on the week. The frustration I feel right now is pretty intense because this is the first night that I put money in the account and had more to trade with, and I instantly just noticed how emotional I was about my trading. There might have been other factors as well. Tape was moving quite quick tonight. There was other things that had also influenced the losing, but at the end of the day, it didn't feel good. It felt like I was falling back into old ways, and even I hit my 3R and I took a trade, and luckily it ended up being break even because I moved my stop up because I knew that I shouldn't have been in the trade to begin with. Like, all of that, like, I just feel like every bit of patience and everything went out the window because my size went back up.
And this is a very good one, right? So we can see that we've had a massive strong move down on the 30-minute chart, a massive gap, right, on the open, okay? Now we've consolidated. Now, anybody knows, your basic sort of patterns that you see in the market. You normally get a move down, you've got a bearish flag and a move down again. And as we know with our Brooks, oftentimes you get, if you're going to get one move down, you'll at least get another leg down as well after some consolidation period. So I should have been taking that into consideration here as well, right? So that's number one. Let's have a look at this trade so you can see where we're at. Now we did have, if we just bring it back out really quick, I'm just going to remove some of these 50% just so it's not as confusing for now. As you can see here, I've had the 30-minute move up, and as you can see, this is the 50% level that was marked up, okay? You can see we had some support here, and that's why I've drawn the box. Now, let's go ahead, knowing the context that we're likely to move down after we break through this point. Let's just think about that for a second and keep that in the back of our minds like we should when we're trading. Now let's drop down to the 5-minute. You can see that we did react off this level. So again, I still had my 50% level. I still had the peak in volume. As you can see, we had the peak in volume on the move down, okay? So you can see we're dropping, and then we've got this peak here, all right? Now, on the tape, you can see, or I saw confirmation that we had some buying pressure coming in and absorption happening. So I entered this trade. I took the loss here. But what I should have done, based on the fact that if we're going to take this trade, one, it's not going to be a long-term trade. I was aiming for all the way up here at the high of the 5-minute leg, which I normally would do if, let's say, we didn't have context, or it might have been ranging, or we didn't have a bearish context and we had a more bullish context. I would have aimed for the top of the 5-minute leg that we had down, which was at about 25,669. Okay. The only problem with that is that that wasn't the context, right? We had a very bearish context in this case on the 30-minute time frame. So instead we should have played this very short and been very risk off, or knowing that it was very much a scalp trade, if any, okay? So we could have had two options: not taking it because it was too much of a risk, because it was such a big drop down, or just being more patient when it came to taking the trade, having the extra confirmation because we know it's higher risk, or we should change our take profit. So in this case, it's likely to not come all the way back up here, right? Because that's where the consolidation was. At best, came up to the, I guess, support level that we have right at the bottom of the original range, okay? At best. Now, we know we trade off 50% levels because that is the discount or premium level, right? And if you actually have a look here, if we marked up the 50% level on the 5-minute time frame, so from the low of this leg, okay, this 5-minute leg, we marked up a 50% level on this leg. As you can see, price perfectly came to this, all right, and rejected. I wouldn't say perfectly, very close, but it came to this and reversed. Now, if you actually have a look, based on our strategy, we would have easily got a nice little 3-hour trade here. It would have still been a great trade. The only issue is we didn't take context into consideration here and go, okay, well, if we're bearish, but we still see our setup as on a long setup, then we must take profit at the 50% level. Now, what if the 50% level only had 1 hour movement to go? Then I probably wouldn't have taken that trade because that expected value of that trade was not positive. So I want at least 2 to 3 hour for me to be able to take that trade. And in this case we did, so it would have been okay if I had managed it correctly. Along with this major lesson of learning context and understanding how important it is to become a profitable trader, this fortnight I learned a whole lot of other lessons as well. I learned that I was over managing trades because I was pulling my stop up when I shouldn't be and not giving the trades a chance. I also sized up too quickly because I put more money in and it was too much of a shock to my system and caused me to trade emotionally. I needed to size up slowly. There was so many little lessons laced in this fortnight, but I couldn't possibly fit it all into this video. If you like this video and you want to know more about my journey and how I got here, click this series here. I'm basically journaling my way to profitability. And if you want to know more about how I read the tape, as unfortunately I can't show you on these journals, click this video here. You'll understand a little bit more when it comes to reading the tape and how I read the tape when it comes to entering my trades. Also, I would highly recommend you journaling on TradeZella. As you can see, I use it all the time and it's helped me so much. It saves me time when it comes to journaling. It helps me work out my statistical edge and where I'm going wrong in my trading. So if you want to try it out, click the link below, use the code NOVICE10 to get 10% off. I'll see you in the next video. Thanks.